If you are not investing in a Roth IRA, you need to start today. A Roth IRA is actually one of the easiest ways to earn $1 million and build long-term wealth. Welcome to Finance Frog, where we save smart and invest smarter. We have helped thousands of viewers understand complex financial topics by breaking them down into clear beginner-friendly steps. And today, we are doing the same for Roth IRAs. In this video, we will answer the following questions. What is a Roth IRA? Why is it valuable? What is the difference between a Roth IRA and a 401k? And even how do you start a Roth IRA as a first-time investor? Let's begin. So, what is a Roth IRA? Let's start with the basics. A Roth IRA is a retirement account that lets you invest money now and withdraw it tax-free later. To simplify, you invest money that has already been taxed, such as your take-home pay. That money is invested in stocks, ETFs, etc. As it grows over time, you don't pay taxes on any of the profits. When you retire, you can take all of it out 100% tax-free. So, if your investment grows from $10,000 to $100,000, you get to keep all of it by the time you retire. Do you know what else is free? Hitting that subscribe button, so we can continue making quality videos to help you become more financially literate. Help us to reach our goal of 1,000 subscribers. Now, here are a few simple rules about Roth IRAs you need to know. The first is contribution limits. Currently, you can contribute up to $7,000 per year if you're under the age of 50. The second are income limits. If you make over a certain amount, around $161,000 if you're single, you cannot contribute directly. But there are workarounds like a backdoor Roth IRA. But for beginners, you don't have to worry about this yet. The third are age rules. You can withdraw your contributions, what you put in, at any time, tax and penalty free. But to withdraw the growth, your returns, tax free, you need to be at least 59.5 years old and had the account open for at least 5 years. The fourth is investment selection. A Roth IRA is just a container, and what you put in that container, stocks, ETFs, index funds, is up to you. It's not an investment itself, it just holds your investments. What's the difference between a Roth IRA versus a 401k? Let's take a look at how the two accounts compare. A Roth IRA is taxed now, while a 401k is taxed later. You can contribute up to $7,000 per year, and for a 401k, you can contribute up to $23,000 per year. You can choose your company with a Roth, while your employer will provide your 401k. As far as investment options go, a Roth offers any based off of the company, whereas a 401k is limited to what your plan offers. There are income restrictions with a Roth IRA, but none with a 401k. Last but not least, there is no employer match with a Roth, while a 401k more than likely will match. Feel free to pause the video here to go through the comparisons to see which is right for you. In summary, a 401k is great if your employer offers a match. Take it, that's free money. But a Roth IRA gives you full control, more flexibility, and tax-free growth. Most smart investors use both if they can. Why is it so valuable? Here's the deal, the earlier you start, the more powerful a Roth IRA becomes. This is thanks to compound interest. Take a look at this Roth IRA calculator. If you invest $7,000 a year, starting at age 21, by the time you're 60, you could have $1 million or more, all tax-free. Keep in mind that we only use the low end of the average rate of return at 6%, so more than likely you would have even more money than this. Using the same parameters, but waiting until you're 32 will earn you less than half of the previous return. In this case, you would have about $480,000. This goes to show that Roth IRA rewards people who start early and stay consistent. Even if you're only putting in $50 a month, you're building the habit that you can grow. You need to start now. How do you start a Roth IRA from scratch? Starting a Roth IRA is super simple. You can even do it from your phone. Step 1, pick a platform. Some great beginner-friendly options are Fidelity, Vanguard, Charles Schwab, M1 Finance, and Robinhood. They're all reputable and offer easy-to-use apps. Step 2, open a Roth IRA account. All you need to do is enter your info, verify your identity, and choose Roth IRA. Step 3, fund the account. You will need to transfer money in from your bank. Now, you don't need the full $7K to fund it. You can start with as little as $1. Remember, building the habit of depositing money into your Roth is the goal here. Also, once you are making more income, you'll already have your account set up so you can deposit whenever you'd like. Step 4 is choose your investments. This is where many beginners get overwhelmed. But don't worry, most successful investors keep it simple. One of the best options is to invest in a broad market index fund or ETF. These are collections of hundreds, sometimes thousands, of companies bundled into one investment. Two great beginner-friendly ETF examples are VTI and SCHB. Vanguard Total ETF is a low-cost ETF from Vanguard that gives you instant exposure to the entire US stock market, including large, mid, and small cap companies. SCHB is a low-cost ETF from Charles Schwab that gives you broad exposure to over 2,500 US companies, similar to Vanguard's VTI, but through Schwab. So, why are these great investments? They are great because you're not betting on one company to do well. You're betting on the entire US economy over time. And historically, the US stock market has gone up averaging about 7 to 10% in annual returns after inflation. Step 5, automate your contributions. One of the biggest secrets to building wealth is consistency, and automating your contributions makes that easy. Instead of trying to remember to invest each month, set up an automatic transfer from your checking account into your Roth IRA. Most platforms let you choose if you want to contribute weekly, bi-weekly, or even monthly. By automating it, you turn investing into a habit. Even small amounts like $10, $20, or $30 a month adds up over time. And because your money goes in regularly, you'll naturally benefit from dollar cost averaging, which means you buy investments at different prices over time, reducing your risk of bad timing. Think of it like putting your Roth IRA on autopilot. You won't have to stress about when or how to invest. It just happens behind the scenes while you focus on life. A Roth IRA isn't complicated. It's one of the easiest tools to build long-term wealth. And here's the best bit. It's a key part of a long-term financial foundation that you can start in your 20s. In our recent video, we break down the exact steps to set yourself up for a wealthy, stress-free future. And spoiler, opening a Roth IRA is one of the biggest moves on that list. Be sure to check it out as it's linked above. Other than that, we'll see you in the next one. Remember to always save smart and invest smarter.